You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
There's a lot of money to be made in this space. I think more general investor money will come in to the seniors, but that will start to trickle down. But I've never seen such a strong divide between the seniors and the juniors, the exploration names, as we've seen now. Is very different from earlier recoveries like we've seen in 2009 after Lehman crash, like we've seen in 2016, and like we've seen after the COVID crash in H1 2020.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me, I have Willem Middelkoop, the author of The Big Reset and the founder of the Commodity Discovery Fund. In our conversation today, we will discuss the Fed's pivot, the gold market, portfolio allocation, and some detail on the Commodity Discovery Fund and what sets it apart from its competition. Willem, it's great to have you. The current market is one that's super interesting. Over the last week, we've seen the Fed pivot. We've seen the Chinese infuse their economy with a stimulus package. It's a playbook we've seen before. I was wondering, what do you think it will be its effectiveness? And do you expect anything different this time around in this easing cycle?
Well, in a way, I think it's business as usual. It's how the cycles work. When they start easing, or just before they start easing, gold is taking a new trend. And during the rate cuts, you often see gold making quite a bit of a move. And since the precious metals related stocks are so undervalued, we could see an even stronger bounce. We've seen that already with the producers. But if you look at the exploration, the juniors, it's still rock bottom. Look at not the GDX, but look at the CDNX, which is the stock symbol for the Toronto Stock Exchange Venture Index. It's flat, very, very close to the bottom. And if you look at the volumes, there are no volumes. So it's like all the retail investors have been chased away because the first recovery in 2016 was short-lived. The second recovery in 2020 was short-lived. And it's like nobody is paying attention anymore. But I think that will change once the Q3, Q4 numbers come in for the producers. People will understand that there's a lot of money to be made in this space. I think more general investor money will come in to the seniors, but that will start to trickle down. But I've never seen such a strong divide between the seniors and the juniors, the exploration names, as we've seen now. Is very different from earlier recoveries like we've seen in 2009 after Lehman crash, like we've seen in 2016, and like we've seen after the COVID crash in H1 2020.
I was recently in Vancouver and I spoke to a number of company CEOs and a few other people. And one of the notions that I heard, their explanation for the difference in the equities and the gold price was that there's too much choice out there, that Bitcoin and tech stocks and marijuana, I guess a couple of years ago, have kept people away and will keep people away from the resource stocks in the future. Do you agree with that?
No, I think there are a lot of self-inflicted wounds here. If you look at the Canadian, let's say banking sentiment, all the tricks that have been played in the last 10 to 15 years from the brokers and the bankers and the CEOs of all these companies. 4 years ago, many of the people I know in this business, they all changed from being normal investors or normal management into shell builders. Everybody was building shells. They all were starting to give themselves 5 million shares at 0.1 cents. And then coming to investors like us, you want to participate in the seed round, you only have to pay 10 cents. But they forgot to tell, they gave themselves shares at 0.1 cents. And they all thought they would be, that was the get rich quick scheme. And now they all learned that they can't finance, and they're all stuck, and they all need to die eventually. So out of the 3,000 listed exploration stocks in Canada, at least 1,000 need to die. Please. And then, we pivoted our structure, our investment strategy because of this. We only talk with guys who have a tier 1 or tier 2 project. And all the brokers, well, they learned the hard way the last 12 months. They don't have to call us anymore. They don't have to email us anymore with anything that's not tier 1 or tier 2. So in a way, the market is broken in Canada. And not because there's too much other stuff. Unfortunately, we need to conclude that there's no serious regulation on the Canadian markets. There have been so many tricks have been played, and I think that's the main reason why most of the investors left. But that's great for a contrarian investor, because that means that the real quality companies out there with very good projects will be sold for billions and billions, because there are the tier 1 and tier 2 projects out there. And they're very few. So we used the downturn of the last 13 years to really study the world, because we also invest in Australia and in Africa. So after having so much time in this bottoming phase of the market to study all these projects, we know which projects are solid and which will be sold at 5x and 10x. And we already see that happening in our portfolio. Our portfolio is up this month over 5%. The better exploration companies are starting to shine. So every day there's one stock in our portfolio which jumps 10-15% because they were so undervalued. And now with the current gold price near 2,700, silver on the verge of a huge breakout, or actually has already broken out on the quarterly chart. So the next years will be fun.
Right. What about the idea that there's no money around for junior resource stocks? I think what you're describing, this question is good, because my perception is that the money is there, as you described. It just may not be available to all the companies. Do you agree with that?
You're 100% right. There's so much money available. We just participated in a financing of Greatland Gold. So actually, we couldn't join the financing because we were maxed out. But we bought some in the open market when there was a window. But this company just completed a financing of $400 million, in 24 hours. So there's enough money available if you have a good project. And why was Greatland Gold? They're London listed. They have a project in Australia. Well, why were they able to finance? Because they bought the Telfer mine of Newmont. Newmont, they took over Newcrest and they rebalanced their portfolio. So the Telfer mine was for sale, and Greatland Gold made a new discovery 40 kilometers east of the Telfer mine. So there was a match made in heaven, and the timing is perfect. And then you see, when there's a good story out there, investors understand it, and they have lots of money available.
Going back to my first question about this stimulus package and where things seem to be headed. I read your book a number of years ago, and I've actually read it a couple of times since then. And you talked about this sort of, I don't know if necessarily a planned reset in conjunction with chaos. Yeah. And so do you think, are we still headed that way? And how does CBDCs sort of fit into that? Because a couple of years ago, there was a lot of talk about CBDCs, and it's sort of gone under the radar. So where do you see that in the future?
Well, actually, I'm in the process of doing all the research to write another revised edition of the Big Reset. But actually, I don't have to change a lot. Of course, the timelines changed. I think the reset, well, let me frame it this way. If you look what's happening in Japan, if you look what's happening in China over the last week, the restart of QE, If you look what's happening in the US, and if you look at what's happening in Europe, Germany, the car industry is crashing down. So there is so much pressure in the broader economy. A worldwide recession is near, but we won't enter a serious worldwide recession because central banks will flood the market with liquidity. Look what China has done. Look what's happening in Japan. So soon in Europe and the US, they will need to provide more stimulus, liquidity, money to the markets. And we already seen, the start of lower interest rates. And this will lead to another wave, another phase of currency debasement, which we also call inflation. So inflation, we've seen a very move up after the COVID crash in 2020. Inflation went to the double digits. Now inflation is coming down and everybody thinks that problem is solved. But now the real economy is getting into getting a bit reaching stormy weathers. You need another round of stimulus, and that will make inflation go up again. And you could compare that with the 1970s when you had 3 rounds of inflation. Well, the first was late 1960s, and the second phase of inflation is often the strongest one. So, but that will all play out, I think, next year. And for now, enjoy the recovery in the precious metals. But when the inflation comes back and when the money creation will come back, I think gold and silver will see some more moves to the upside.
How about does a world with inflation and the cost of living is already super high? I was in the States a couple of weeks ago on a vacation with my family, and I couldn't believe the prices compared to when I was a kid. Growing up in Canada, yeah. The States was always cheaper, and it's not anymore. No. And so the cost of living is an interesting point, especially when you talk about things getting more expensive. Does that modify or adjust your projection for, let's say, EV adoption or the electrification of the world? Does it change that at all moving forward?
Well, I still haven't answered your question on CBDC, so let's revisit that later. But I think if you look at there's a bifurcation, especially in the US economy. You have the people who have the high-paying jobs; they all make over 100K. I met some people on a cruise ship, and they weren't very high rollers, but they were making 150K, 160K, and that sounds well. I make less here in Europe. I'm a fund manager of a 100 million plus fund, but it sounds ridiculous to me. But 160K is getting like quite normal if you have a good white collar job in the US. And then if you look at the working class, they make 50,000, 60,000, 70,000. And like you experienced yourself, I witnessed the same. I bought a small bottle of water and some crisps, and I had to pay $11, ridiculous prices. So there's this, on one side, there's part of the economy which is still quite strong, and people can pay their bills. And then you have the people out there living in the Midwest or whatever. And that's where Trump gets its voters. And they're sick of the current economy. They're sick of the current politics, and they're sick of the current system. And actually, we see the same in Europe. We had the elections yesterday in Austria. The populist party and what they call the far-right parties, they're gaining massively. We have a new administration, new government in the Netherlands, and there's a big change is coming. And when I wrote the big reset in 2013, I was writing down the thesis that after 2020 we would see large big changes coming to our system, to our economic system, to our financial system, to our political system, to the geopolitical system. Now with the BRICS alliance, getting all this support, even from countries like Saudi Arabia, Turkey, and even Mexico, you feel changes in the air.
Right. Well, let's revisit the CBDC topic, because it's something that I'm interested in how you see that being rolled out in the future.
Well, it's quite clear that China has been quite successful in rolling out their central bank digital currency. They were the first to really change their system, and also because they had an advantage that that the Chinese citizens, they didn't have credit cards. They missed that whole development, which we had in the West in the 1980s and the 1990s and the 2000s. So the Chinese went to digital money right away. I was actually shocked. I arrived in China some years ago for the presentation of the Chinese edition of the Big Reset. And there was, I think, 2016. And I found a cab to drive from the airport to the hotel. And then when I came to the hotel, I wanted to pay with my credit card, but he didn't accept credit card. And he pointed to his phone, and he wanted me to pay with my phone. And then I asked the doorman of the hotel because I couldn't understand this guy. And then the doorman said, "Oh, I'll take care of it." And then I saw the doorman take his iPhone or Samsung, and he pointed to the telephone of the cab driver. And then he paid within a flash of a second. And then I asked him, how can I pay you back? He said, "Oh, it's on your hotel bill. Just give me your..." And that was 8 years ago. So they already paid, by phone. So the Chinese were very successful in making digital money. And of course, it helped the Chinese government in their efforts to control their citizens. So China has been very successful in using all these digital surveillance techniques, but also actually building a new financial system there. And our governments in the West have looked at this business case and thought we could do the same. But actually, they're still studying it, they're still building it. But don't be surprised when the ECB or the Federal Reserve one day will announce we have the system ready for the digital euro and the digital dollar. But in a way, it's another layer on top of the fiat money system. It's another layer on top of a paper-based system. So it's not that big of a change. And of course, the surveillance can become much tougher. And we've heard the first stories coming from Israel that they might be able to start new financial repression in which it's forbidden for general public to buy gold and silver. We saw new rules in the EU that you can't do any payments, cash payments over 3,000 euros. So it was the last chapter in the Big Reset that you could expect more financial repression coming. And I always warn people that they should act now before it's too late. So diversify, make sure you have some physical gold and silver, make sure you own it yourself, and have some Bitcoin. And I think the window of opportunity is still open, but it might close pretty fast, especially when we reach a new crisis, which could happen, within the next 12 months.
Right. And so is it like I don't own any Bitcoin, and I've sort of gone on the periphery of the whole concept. How do you, what is the difference between owning Bitcoin and gold?
In the Dutch edition of the Big Reset, which was also published in 2014, I wrote that more and more people will begin to understand how a fiat money system will end, and they will start fleeing to all the government can't print, including digital gold Bitcoin. That's what I wrote in 2014. And actually, at that time, I didn't buy Bitcoin myself, although I call it digital gold because it's quite unique form of money because I had gold and silver. But in 2018, I changed my mind because it became clear to me that because Bitcoin is so new and the adoption rate was still so low, that Bitcoin would start to rise much more than gold and silver because of its early phase in the life cycle. And I built my Bitcoin position around $5,000-$6,000 in 2018. I thought I was late, but what's the best time to buy it? It's today or tomorrow, because only 21 million Bitcoins can be mined. And already 93% of all Bitcoins which can be mined technically have already been mined. So there's only 7% left. So imagine 93% of all gold has been mined, or silver, and there's only 7% left to be mined. You can expect a fight for the last 7%. And it's technically it's limited to 21 million coins. We can't change that. So because of that, Bitcoin still has a lot of upside. Like gold and silver also still have a lot of upside, but I think Bitcoin just is the fastest horse in the race, and that's why in my personal portfolio, it's still part of my portfolio.
Right. I've heard you in different interviews, and in your book, I believe you referred to it too. It was 25% cash, 25% precious metals, 25% real estate, and 25% equities. Does that portfolio allocation still hold? I mean, you obviously added Bitcoin in there. And
the Bitcoin part is in my cash part. So the 25% cash can also be Bitcoin. I'm a bit secretive about my divide between cash and Bitcoin, because I don't want to... We've heard some stories also in the Netherlands that people were had some friends coming at the door at night asking about the Bitcoin. So I don't want to disclose everything. I think it should be part of your portfolio.
Absolutely. But in terms of the other things, we talked about the debts are ever increasing, the governments with CBDCs, in particular, the 25% real estate, obviously it's like a mine. You can't necessarily move your house or yourself sometimes. But is there anywhere you can go in this world where you could move that's freer, that has, more, less tax?
Well, of course, not all people listening have the same net worth, so if I'm discussing my own portfolio, it's for somebody in my situation who has some money to spend. I'm a bit older. I'm 62 now. I need to take care of my own pension. So I'm not ultra rich, but I made some money, and I was able to buy a few apartments in Dubai to diversify also my real estate, because I have real estate in the Netherlands. So I bought a few apartments in Dubai, and I like that because it's outside the EU. The valuation is very attractive. It's half the value, or half the price I pay in Amsterdam, and it's 1/3 or a quarter of what you pay in Paris or London. But of course, you need deeper pockets to be able to diversify to diversify portfolio in that way. So I understand that's not for everybody, but you can also diversify by buying ETFs, and you also have real estate ETFs and who are diversified. So there's always a way to diversify. And when people tell me they don't have money to buy a lot of gold because it's so expensive, well, just buy some silver coins. These are very cheap. They're still very cheap. Everybody can buy silver coins, and that's a way to diversify as well.
Right. We homeschool our kids, and my oldest daughter is going to be turning 12 in a couple of weeks, and she's already started working and doing her own thing. And that's something that we did is got her to start buying silver coins. And it actually, to me anyways, it teaches the kids with something real in terms of fiat versus, the actual metal. And I completely agree. M&A has been a huge topic throughout the resource sector. I think there's a situation going on in Finland in particular that's interesting to me. And I want more to speak on the move that I'm going to talk about rather than the actual deal itself. But Rupert Resources CEO, James Withall, he stepped down, and this is after a terrible shareholders vote on their confidence in him. And to me, it was related to possibly the deal not being done with Orion to consolidate this area. What's interesting is he steps down, and in walks La Mancha's chief technical officer, Graham Crew. And so my question is, you don't have to speak directly to this situation, but I'm bringing it up. When you see moves like this that happen, when you see someone that's installed that obviously has got a number of not only technical background, but he's connected to La Mancha, when you see these moves, do they mean anything to you, or are they just plainly coincidental?
Yeah, I know what you mean. I know what you talk about. We've talked about this a lot with analysts within our company, even with the companies. I'm being told that this isn't an initiative which came out of La Mancha, but I find it very hard to believe that La Mancha is ignoring this situation. We know La Mancha, it's a company built by an Egyptian billionaire, Mr. Saviri, and he's a very smart guy. And the Rupert discovery is quite exceptional. This is a project what we call tier 1, tier 2. Actually, I think it's tier 2. It's plus 5 million plus ounces of gold. Tier 1 is 10 million plus in our book. But it could be 10 million plus one day. And I think groups like La Mancha, like the Lundin Gold family, the Lundin Group, they all know this is a very valuable deposit. Like they all know Snowline is a very valuable deposit. And there are so few targets out there worldwide. And that shocks me every day. We studied worldwide the best projects, and we made a list of the top 100 undeveloped mines. And then we made a list of the top 50. And actually, our top 40 of investments is 75% of our portfolio. And these are all these projects. So the Ruperts and the Greatland Golds and the Sol Golds. And actually, if you look at every metal, there are only 5 real good copper projects out there for sale, which are of interest for Western groups to buy. There are only 5 zinc projects. There are only 5 silver projects. That's not even 5 good silver projects out there. Maybe we have 3 or 4. So I wouldn't be surprised when La Mancha or their friends come in at display at a certain in the not too distant future. But we never know, and that's why we invest in all of these top 40, top 50 projects. Because since our inception in 2008, we had 6-7 buyouts in our portfolio every year, in the good years, in the bad years. So if you invest in the tier 1, tier 2 projects, they will always be bought out. And sometimes you have to wait 10 years, like Sol Gold. Sol Gold is still around. It was a discovery in 2015, 2016. Everybody expected it to be sold very quickly. It's still around, but it will be sold eventually. And then you have discoveries like Great Bear Resources, who are sold for $2 billion within 3 years. And you never know. And we don't try to trade on insider tips. And we're not allowed to do that, but what we do is we do our homework. We make a list of the best available projects, and we put money in all of them. And actually, we're so lucky that most of these exploration or development stories still haven't moved. SolGold is worth less than 400 million. This is the largest undeveloped copper gold discovery worldwide. And it should be traded, it should be valued billions. But in a way, we're so fortunate that we can still buy shares at these extreme low valuations because we're building a portfolio where we pay pennies to the dollar. And that's what we tell our investors. And even this month, we've had net inflow every year since 2008. We still have net inflow of money, although the markets are still very depressed. And I feel so fortunate that I can buy all these bargains because we all know the metals are getting scarce. It's like Bitcoin, you know, there's only so much left to be mined. So be able to buy all these stakes in all these deposits. We have stakes of 1 to 9.9% in some of these companies, and that's a once in a lifetime opportunity.
What about, in terms of the whole spectrum, and in particular with copper, what about what the Canadian government did to Solaris in the block of Zijin's investment? How does that apply to the other M&A targets where you basically eliminate maybe the East? I'm not sure if it encompasses all the BRICS, but anybody who's deemed as an enemy or a foe of the Western nations. How does this apply to the M&A market?
Well, the Canadian government thinks they're smart, but they're actually so stupid because what happens, people and companies are moving out of Canada. We know a few companies already moved to the Middle East. And many more companies are thinking about moving to other jurisdictions. But we have our political leaders in the West who are thinking they are still in charge. They are still the guys who will tell the others what the rules of the game are. Well, I can tell you the BRICS countries don't accept our rules of the game anymore. And if Israel is part of our rules of the game, I don't want to be part of those kind of rules of the game. And I once said in an interview, you have over 140 countries didn't join the Western sanctions on Russia. That doesn't make them friends of Putin, but they're fed up of being told by the West what they should do or they shouldn't do. So they're fed up with the double standards, and that also goes for a country like India. They don't have sanctions; they just trade with Russia, like we should be doing even in the West. We can't ignore them, and I don't like what Putin did to the Ukraine, but we shouldn't forget that the US had been very active to complete a regime change in the Ukraine in 2013. And the US had been very active to bring all kinds of NATO troops and NATO trainers to Ukraine in the years following the Maidan revolution. And they knew at a certain point Putin would need to act. So, in a way, and this is part of the US interpretation of the geopolitical situation, Mr. Brzezinski, who was the security chief of Mr. President Carter, he wrote a book, The Grand Chessboard, in the 1970s, explaining that Ukraine was critical and essential for US power. And he even wrote, Ukraine controls the Eurasian continent. So there's so much at play which is not being discussed in Western media, but it is being discussed in China. It is being discussed in India. And I think the rise of the BRICS alliance is the single most important trend. And that's what the revision of the Big Reset will be all about, that, because I think the BRICS alliance will make sure that they'll stop trading in dollars for a large part. And we won't see a collapse of the dollar, I think, but we'll see the rise of an alternative trading financial system coming from the East, centered around commodity-backed currencies, commodity-based currencies, and that trend is a very powerful trend, and that's something people should really study because big changes are coming.
Right. In terms of your fund, you concentrate on new discoveries and that tier 1, tier 2. Do you ever get into playing or making contrarian investments, like specifically looking at certain metals that are out of favor and then trying to invest more in that?
Oh, yeah. Silver has been out of favor for a long time. We have large positions there. Zinc is very out of favor now. Lithium is out of favor. But we still try to be positioned in the best projects. But being a contrarian, well, our whole fund has grown from being a contrarian and willing to hedge myself against the fiat and the paper money system. But if you always want to be a contrarian, you can also make some mistakes because you also have to follow the strongest trends to make money. And I've seen many investors who were too stubborn and who were stuck in their own investment philosophy and got burned and even lost their fund or lost their investments or lost their lives.
In terms, there's definitely money out there. And again, when I was out in Vancouver, I talked to a number of people and they are looking for areas to deploy it. In terms of funds, there's a bunch of funds worldwide, and the Commodity Discovery Fund has definitely had a great track record of success. How do you differentiate the Commodity Discovery Fund to the other funds that are out there?
Well, our closest peer is actually Crescat or even Eric Sprott. You know, we're one of the very few who have over $100 million invested in the junior space. There are very few people. Yeah, you have Rick Rule, you have Crescat, Eric Sprott. Mike Gentile is another one. And what sets us apart is that we decided to forget about the tier 3, tier 4 projects. And if I look at the portfolio of Eric Sprott and Mike Gentile and Crescat, I see a lot of the tier 3, tier 4 projects. And what do I mean? These are projects which have 1 million ounce now, and they hope they will ever find 5 million ounce. But hope is not a strategy we are willing to play anymore. And I can't understand why Eric, who's such a bright guy, but if you look at this portfolio, we can look it up, you know, it's on Bloomberg. There are 73 stocks in this portfolio. They were valued $1.6 billion in 2021. And a few months ago, the valuation came down to 430 million. Because there's so much money to be lost if you're not in the winners and the market turns against you. And Mike Gentile had the same experience, I think. His portfolio isn't public, but if I see what companies he promotes and puts his money in, and I think they will do well in the end. They will do very well. But I've been doing this for 20 years now, 15 years as a fund manager. I'm very proud of my track record if you see how many buyouts we had, over 80. But I'm not very happy about the returns because most of our investors are still underwater. But I can explain it to them because, like I said, we can buy stuff pennies to the dollar. And when you have a few years out and this is part of your retirement money, you'll do very well. But this is such a difficult market. And, well, it really helped us that we stuck with the right projects and the best companies. But if you look at the recoveries now, the worst companies recover most. That's what happens in an early bull market. So actually, the portfolio of Erich Sprott is recovering faster than our portfolio because there's so many companies. He played all the silver companies. Every company which had silver in his name, or he was throwing just a few million at them, and I think, well, he became a billionaire by investing. So I think he's a smart guy. But internally, I told our team, I will never want to have the risk any longer that our portfolio can go down 70-80%. We've grown our portfolio to over 100 million AUM, and that's I don't want to risk it anymore.
I hear you. And Rick Rule's got a great quote that I think applies to what you're saying. He said, the small mines have the same risks as big mines, but small mines can't make you big money. And I think that rings true with exactly what you're saying.
I like Rick. He's a smart guy, but even he closed down his exploration fund a few years back. Hardly anybody knows this, but he started a small fund, discovery, investment fund. It was a Sprott fund. It was never really marketed, and there was some $80 million in there. It was run by Neil Edgehead, a great geologist, and he's now consulting geologist for ourselves. So even he closed down his discovery fund.
Yeah, it's a tough business, and hats off to you that you've been so successful. Willem, please give us the details on how investors can find more information about the Commodity Discovery Fund. And of course, I think follow you on social media.
Well, if you have Google on your computer, you type in Commodity Discovery Fund. It's very easy. And well, I have a Twitter account. I'm very active on Twitter. So just look for my name on Twitter and you'll find it, W Middelkoop. And I also have a Patreon account, and I charge a bit of money for that. But I was fed up by giving everything away for free on Twitter and then receiving all the criticism. So the best tips and the best stories and the best research I put out on my Patreon account. Post something there every day. And one of the smart guys here in Belgium, he told me, Willem, you give so much away for the price of a cheap lunch. And that's what I actually do on my Patreon account. So people are welcome to sign up there. And they can download a copy of The Big Reset for free at our website. Just Google free download The Big Reset.
Excellent. Well, Willem, it's been an absolute pleasure. Thank you for coming on, and hopefully we do it again soon.
Thank you.